Good morning. Assalamu alaikum. I hereby welcome all of you for the analyst and the investor presentation of Al Madina Insurance Company for the financial year 2022. My name is Hitesh Popat. I am the designated relation officer. Along with me, joining today is our Deputy CEO, Mr. Shakib Mahmood, our Head of Internal Audit and Compliance, Mr. Hamad Al-Siabi. We would like to thank MSX for providing us with the opportunity to meet and interact with the investors. Moving on to the agenda for today. Firstly, will be the company overview, followed by the company's financial performance, the financial year 22 results, outlook, followed by a Q&A session. Moving further, I would like to call Mr. Shakib, and who is our Deputy CEO, to take it forward from here.
Thank you very much. As Hitesh mentioned to you all, we have a small agenda, but feel free to ask questions whenever you like. And I'll give you an overview of the company. Although most of you know about the company, we are almost 16 years. But for the benefit of the people who are joining for the first time and wants to know our overview of the company, I'll take you through, and then I'll ask Hitesh to take us through the numbers. In terms of our vision, mission, and values, the vision of the company is to be a leader in the measured terms of profitability to the stakeholders, satisfaction for its customers, and commitment to its employee. So we look into three-pronged vision, whereas the customers, which is the participants, and the shareholders as well as the employees are important, and we have taken many steps to look into the benefits of all the three. Mission, in terms of the mission, to provide cost-effective insurance solution and superior customer service in a manner that is compliant with Sharia in all respects. So we call it cost-effective, not the cheapest, but the superior customer services. In terms of our values, we continue to innovate new products, responsibility, transparency, integrity, and teamwork. These are our values. I'll take you through a brief snapshot of the journey of the company. The company was formed in 2006 as a Al Madina Gulf Insurance, which was a conventional insurance company. Later on, this was converted in 2014 as a fully Takaful company into general health space. Then the Al Madina has now grown to about $116 million company, and this is the third largest insurance company in terms of the gross written contributions. And when I talk about third largest, I'm not talking about the Takaful space, because Takaful is only two companies in this space. I'm talking about the entire gambit of the insurance industry. We are number 3 in terms of the size. And in terms of the operating profit, we are probably, if you exclude one company which has branches overseas, like operations in Saudi, Doha, UAE, etc., we are probably number 1 in terms of the operating profit this year. That number is based on the unaudited numbers. I'll have to still see the audited financial statement of many companies. The company has a balanced and a stable portfolio across all businesses. We are dealing with the corporates, the government, the business, the personal line, and we have 8 branches, 1 sales hub, and 1 kiosk. So in all, 10 are there. This is the first Takaful company in Oman, and it has a paid up capital 17.5 million, which is roughly $45.5 million, as against the minimum regulatory requirement of 10 million. So we're still 7.5 higher than what is the minimum requirement of the regulator. The company adheres to the Sharia principles strictly. We have our own Sharia board, and there are rules and regulations which CMA has come up, which they also look into as a audit. We have an internal Sharia audit, we have an external Sharia audit, and CMA also looks into it. So there's 3 people looking over us. Al Madina has remained profitable consistently for last 7 years and continuously dividend paying on a very stable manner for last 7 years. This is our 18th year of operation, and we are still evolving and growing, and hope to grow profitably in future as well. This shows on the timeline how the Al Madina, from a 3.8 million top line company in 2007, has grown to now 44.71 million, which is more than 12, 13 times. So it shows that the growth is consistent. It has always been on the upward, but we just do not want to grow the top line. The focus is to grow profitably, to be responsible to the society, do our bit to the society, and even do not dump all the losses onto the participants. So we maintain a balance whereby the shareholders, the participants, and the society benefits, and yet we grow. This is the peculiarity of our company. In terms of the business, as you know, we are in a business of risk management, mitigation, and risk transfer. That's essentially insurance is, and we have to accept risks. So by saying that, I'm stating the obvious. But why I'm saying this is that anything in the insurance industry is not sure, because you're accepting risk. You have the net cats, you have things which are not under your control, etc. Given that, Al Madina symbolize a vision of harmony with its all stakeholder, which I've already spoken about. We are into general family takaful, and we adopt wakala and mudarba model. Wakala for the insurance part, mudarba for the investment part, in accordance with the Islamic Sharia principles. We are one of the largest energy and power insurer in the country. So we have the support of the reinsurers. And because typically the energy and power insurance are big ticket policies, which not everybody has the capacity to place in the market. Second largest health insurance in the market. We have a customer base which is loyal to us, and they repeat with us because of our superior customer experience. We have major banks, Islamic banks, have tied up with us, and we deal with the bank assurance products. We have expertise in handling various clientele across various industries, combined with professional experience of underwriters, claim handlers, with experience in various markets spanning across Europe, Middle East, and Asian subcontinent. When I say experience across, meaning the people, the professional who work with us, they have experience in these geographies. The efficient claim servicing and implementation of best international practice in the industry. And at this point, I would like to point out that we are probably the insurance company which has settled the biggest claim in the history of insurance in Oman, and without any problem within the time frame, etc. I don't want to take the name, but that's was there. Our all reserves are actually validated, and we do it on a quarterly basis. So we are in line with the best practices across the world. The takaful industry, as you would all realize, is a peculiar in terms of its own challenges, because the takaful has to comply with not only the International Accounting Standard, but IOFI standard, which is the standards issued by the board for the takaful Sharia. We also have to go through the Sharia Supervisory Board. I understand there is a Supreme Sharia Committee which is coming up in CMA. We'll have to go through that as well. We have the internal audit, we have the external Sharia audit, and then we have the external IFRS auditor. So there are quite a lot of challenges. And operationally, there is an operational requirement to maintain separate books of accounts. So you cannot mix the books of accounts of shareholders, policyholders, and within policyholders, general and family also have to be separate. So you have to keep separate books of account. You have to maintain separate bank accounts also, as opposed to the conventional. Shareholders separate, policyholder, within policyholder, general, family, takaful, they also have to have separate accounts, and intermingling of the funds is normally not allowed. As a takaful company, we must manage the fund in such a way that there is no financial or accounting deficit in any of the participant fund, which is the general, the family, and the medical as well. So all of them have to be financially and accounting-wise in positive. We have certain restriction in writing certain businesses which are not Sharia compliant. So we cannot do those sorts of businesses. Takaful companies are only allowed to deal with takaful reinsurance companies. And takaful reinsurance companies are far and few. Many have recently exited the market, etc. So it's a challenge for us to find the takaful reinsurance companies to place our risk. Sharia compliant, the investment has to be Sharia compliant, and we have limited opportunities. Only Sharia compliant investments are allowed. The continued monitoring is required. If investment at the time of investing is a Sharia compliant, but later on for any reason, for example, a telecom company which is Sharia compliant in the beginning when we invest, they take a loan from a conventional bank, then they become non-Sharia compliant. And at that time, we have to immediately exit. And if there is any dividend, etc., is coming, we have to purify that or give it in charity. So that's another this thing. The profit yield on Sharia compliant investment, because there are very few products available, are much lower than what the conventional deposit with the banks and the other places that people get. And you will be surprised to know even the government development bonds of Sultanate of Oman, we cannot invest in that. So the yield on that is much better, but for us, it's a restriction. There is a requirement to have a committee responsible, Sharia committee responsible for supervision of the company, as I already explained to you. We have to appoint an external Sharia compliance auditor to conduct the Sharia compliance audit for us. And we have an internal auditor to look into it. We have the CMA. CMA has a special regulation for us, which is called the Takaful Law and Regulation, which we have to comply with. And wherever the Takaful regulation is silent, we have to comply with the IFRS. So in a way, a Takaful company is, as compared to a conventional company, there are three companies within one company, because we have to do all these things separately, the books of account, the accounting, the solvency, the profitability. So there are challenges, but we want to do business right. We want to do business which is in compliance with Sharia principles. So we take that challenge in our stride and look forward to continue to be the best takaful company, not only in Oman, but in the region. For solvency purposes, we have to calculate, I think I've covered that, the solvency separately for all the three lines, takaful, health, and family. And for this year, 2022, there's a new risk-based solvency which has been implemented by the regulator. And we are happy to inform the investor that we are well above the minimum requirement solvency for all the three. This is our distribution and business distribution mix. Last year and this year, we have a pretty good mix with the technical side pretty heavy. As I told you, the energy and power, we are the number one. So obviously the weightage is there quite high. Medical is about 15%, motor is 17%, last year now 19%, and life is stable about 6 to 7%. So all of that is fairly balanced, except for technical, where we have the expertise and we can do that. So, and our distribution mix is also pretty spread. Direct business is almost 47%. Then we have brokers who brings in 41% of the business. So direct business, 47%, almost half of our business comes directly to us through the door. That puts us in a position where we can command the business, because this is the loyalty, the service to the customer they come through. Banks and ministries is 6%, co-insurance is 4%, and agents is We don't have many agencies, and we do not get into that model. Our endeavor is to do more and more direct business rather than relying on to the intermediaries. Brokers are there, they play a role because they have to provide quotation, etc. That will probably continue. But our endeavor is to bring more and more businesses to the direct route, because then you save the cost of getting the business. We believe as a company very strongly committed to in-country value. We are above the legally mandated Omanization percentage. We have a plan to get Omanis into important positions. We have a succession plan. We have a plan to develop certain individuals within the company. Recruitment of training of Omani nationals, we are always onto it. Business relations, we try to do it more and more in Oman. We providing ICB through CSR, very active in the CSR space. More than 85% of our investments are within Oman. We do not go outside the boundaries of Oman and keep the value within Oman. Now, the next is the overview of the previous performance of the company in terms of the company's financial performance, historic, because the historic may not necessarily indicate the future, but it gives you an idea how the company has been spending out. I'll ask my acting financial controller, Hitesh Popper, to take you through that. And any questions, anytime, please stop us, ask us the question. That's the reason we have these forums, and we're very, very happy to answer any of your queries, now or later.
Thank you, Mr. Shakib. Moving on to the agenda number 2, company's financial performance overview. Al Madina has performed robustly in terms of gross contribution, underwriting result, investment income, and profit before tax. These are one of the key parameters to measure a company's performance. Now, if you notice, the gross contribution of Al Madina has been consistently growing. From 2017, it was 30 million, whereas in 2022, it has reached to 45 million. The underwriting result of the company at 2017 was 4.4 million, which has drastically grown to 6.7 million in 2022. The investment of income of the company has also been growing despite the challenges in the investments on the Sharia side. This resulted in a profit before tax to be consistently grown accordingly from 681 in 2017 to 1.6 million for the year 2022. This shows the consistent improvement in the company's performance on a year-on-year basis. Moving on to the next slide.
I think I would like to add here, very important to note here that the underwriting results are growing consistently. And for an insurance company to deliver operating profit, i.e. the underwriting results are good enough to cover your expenses consistently is an important parameter, because most of insurance companies, what they do is they have the investment income and they get the premium up front, they pay the claims later on. So they play on the timing, invest that money, get the investment income, and do underwriting results are always, if you see, are not enough to cover their expenses. But in our case, our underwriting results are always enough to cover our admin expenses, and we are always in operating profit. So that's the differentiating factor. Thank you, Hitesh.
Thank you. Moving on to the next slide, the dividend payout and the return to the shareholders. Al Madina adopts a well-balanced dividend payout policy for distribution of profits to its shareholders. The company continues to maintain a steady track record of continuous dividend payout. This reflects on the financial strength of the company in the more subdued market conditions. So far, till 2022, considering that from 2016, the company has paid out 8 million Omani Riyal as dividend, which is approximately 45.5% of the share capital, which is a good return for the shareholders considering the time frame.
I think another comment I will make here is that one would see that the 2020 spikes up we have 10% dividend and it goes down to 7.5 and then 7. One may ask, is this the trend which is taking your dividend yield downwards? I don't think that's the right observation. The 2020 was a year when everything was closed because of the COVID, and 21 also had effect of that. So the motors were not on the roads, people were not going into the hospital. So I think that particular year, most insurance companies did well. We have come down from 10% to 7.5 and now 7, and I believe that we are stabilizing, and our return will be around that in future. 2022, a rider is that this 7% dividend is subject to the approval of the AGM and, of course, CMA. This is what the board has approved. Hitesh, thank you.
Thank you. Moving on to the next slide is the shareholder fund and policyholder fund profitability. As a takaful company, we have to ensure that both the funds are in surplus and need to maintain a balance. If you notice, Al Madina has been consistently generating profit in the shareholder side and giving positive returns to the shareholders. Simultaneously, on the policyholder side as well, there has been consistent surplus for the past 6 years. The next graph shows the reduction in the participant funds. If you see, the participant fund has an accumulated deficit of around 6.2 million in the year 2019, which has come down to only 146,000 for the year 2022. The company had systematically and strategically planned to reduce this deficit of the participant funds. So Shakib, if you would like to add something on
that. I think, thank you. If you see the 2006, we had 1.043 as a negative in the participant fund, and the shareholder fund has profit. Now, most companies and most analysts and shareholders look into only shareholders' profit, which is right for a conventional company, not for a takaful company. Because here you have to see the combined profits. You know, I know one company which has huge deficit sitting in the participant fund, and they keep on transferring that as a profit to the shareholders account, because you know this is two pockets of one person. You take it out from one pocket and put it in another, and just show one pocket and say, "Oh, we have huge retained earnings," is misleading to say. So the company's strategy was to reduce the deficit in the participant fund and increase the profitability in the shareholders. And how we do it, let's see, it's very easy if you start charging wakala fees, which is quite high, to the participant fund. Participant fund will go into losses, but the shareholder will show a huge profitability. We wanted to balance that. And to balance that, we earlier used to reduce the wakala fees at the year end, which CMA last 2 years did not allow. So now once you have declared a wakala fee, you have to stick to it. But the shareholder continued to give a gift or a hiba to the participant to bring them at least to break even for that year and in profitability. So what's happening because of that strategy, and because looking at the company as overall one composite company, not, we don't want to give you numbers which are misleading and say, oh, shareholder account has huge profits. We try to balance the both, and that's the reason we have reduced, and it's a big achievement for the company. I would like to take that credit. Deficit in the participant fund has gone down from 6 million to only 146,000. And I believe if this year continues to be what we envisage and what we planned, then we will have no deficit. We'll probably have a surplus in the participant fund. And that's how it should be looked into. Any questions? I'm happy to answer. Otherwise, Hitesh, thank you.
Okay. Moving on to the next section, that is the financial year 2022 results. Al Madina achieved another successful year of financial performance. Al Madina continues to retain its third largest insurance company position in terms of GWC, gross contributions, which is 44.7 million as compared to 44.1 million. A growth of 0.6 million has been shown as compared to the previous year. Due to the change of business mix, it may be noted that there has been an increase in the net retained contribution of 4% and a net earned contribution of 6%. As the businesses are gradually returning to their pre-pandemic levels and there are cars on the road and the economy is improving, opening up, there has been an increase in claims of 17%. Despite the increase in claims, the policyholder fund is showing a surplus of 324,000. Shareholder profit also continues to be in profit and has shown an increase of 14% as compared to previous year. The total profit before tax for Al Madina for 2022 stands at 1.6 million as compared to 1.5 million, a 3% increase as compared to the previous year. Moving on to the next slide is the investment composition and performance. Al Madina continues to follow a prudent investment strategy where 89 of the investments are in fixed income space. The company has to continuously ensure that all its investments are well diversified among various asset classes and continuously monitored for Sharia. Despite the challenges on the Sharia side, Al Madina has been able to display sustainable investment performance and has reported an investment income of 1.37 million as compared to 1.35, an increase of 1% as compared to previous year. Moving on to the next slide is our strengths on the financial position. Our share capital continues to remain well above the minimum regulatory requirement of 10 million. The policyholder fund continues to reduce its deficit on a year-on-year basis. As on date, only 146,000 is the deficit in the policyholders fund. The total balance sheet size of Al Madina stands at 123 million as of 2022. Moving on to the solvency margin, the company has maintained a comfortable solvency margin over the past years, and which is well above the minimum regulatory requirement. I am happy to inform that even after the new risk-based solvency has been implemented in the current year, Al Madina still continues to maintain its solvency surplus in all lines of business. Moving on to the next slide, the outlook. I would request Mr. Shakib, our Deputy CEO, to take this over from here.
I think in my talks, I have already covered the opportunities and the future strategy, etc. But I'll reiterate that the opportunities come from the stability in oil prices, the government spending increasing and the economic condition improving, the surplus budgeting of the Sultanate of Oman, and that opens up for us opportunity for new insurances. We'll continue to focus on the banca assurance product with the Islamic banks, etc., and continue to be stable insurance provider in that space. The health insurance is one of the product which is probably going to become mandatory for all this year, as CMA has come out with the unified health insurance scheme called Dhamani. And if it comes into play, then we will have new product and we will have more business coming in our way because we have met all the requirements of CMA, and we are likely to get the opportunity to do insurance in that space, because I understand CMA will not give this license to everybody. It will be selected few companies. And in the Takaful space, we at least be one of the provider. And as a company, we continue to invest into IT upgrades and process automation, digitalization for the insurance process. We will soon go into the automation of the claims also, so that people can online inform and surveys can be done, etc. So we're looking into that and moving towards that. Our emphasis in one word would be stability, sustainability of growth, with a very focused eye on the bottom line. We do not want to grow unprofitably and just keep on growing the top line. Is the bottom line discipline and the focus, which is going to come and which is already in there in the company. And we want to be stable. We want to pay dividend to our shareholders on a year-on-year basis on a very stable basis. And we want to maintain our market position as the top insurance provider, not only in Takaful, but in the entire space of insurance. So that's all from us. Thank you very much for joining us. The floor is open. If you want to ask any questions, we are happy to answer that. If there are no questions, then thank you very much. I think I've counted up to 10. Nobody is asking any question. Thanks very much. Any questions later on also which comes into your mind, please feel free to write Hitesh Popat, who's also the designated investor relation officer. And we will be happy to answer your queries and questions.
Hello.
Yes, can you please introduce yourself and
Yeah. Good morning. Hi. This is Bishmalla from Vision Capital. Thank you for the presentation, Shakib and Hitesh. Just one sort of comment. I think the company is doing fairly well. You're one of the few companies that's been able to, make an operating profit in the tough conditions when most of the players are not able to. My comment was with regards to your investment book. If I look at the composition of the investment book, it's predominantly fixed income. Now, whilst I understand that markets were quite volatile in 2020 and went down, and majority of the insurance sector companies sort of were allocating money towards fixed income, the last couple of years across the GC markets, we've seen an upliftment in market performance. And if I look at your split, it's almost, if I'm not mistaken, I think 10% or 9% of the overall book is in equity, whereas you're allowed to go almost up to 30%. Is that something you would consider to improve the investment yield, or are you comfortable with the current debt equity split in your investment book? If you could just provide your comments on that. Thank you.
We would, I will let Hitesh take that question later on, but to give you the overall background, as I said, the Takaful companies cannot and do not have the liberty to invest in any company which is listed on the stock market. We can only go to a Sharia compliant company, that too, which remains Sharia compliant throughout. For example, if we invest into a telecom provider, and we did actually, and that telecom provider goes to a conventional bank, takes a loan, we have to get out of there and purify all the dividend which we receive from them, give it in charity. So the scope is very limited. You go in there, you don't know whether you are going to make money or the dividend which comes to your way. We cannot control the investee company taking a loan from a conventional bank. We'll have to give that in charity. So ultimately what happens, you come out as a booking loss in that particular share. So we have to be very, very careful in the equity market and go through only Sharia compliant products. So that's what limiting us. And if there is something which, we have asked our Sharia board to look into it, if there is something which we can do differently and be profitable, or till the time the company was Sharia compliant, we can take profit up to that level, etc. So that we are exploring, but we are very careful with the equity market.
I think Mr. Shakib has already covered in detail. We continue to explore wherever the opportunity is there on the equity side. We will surely explore them.
Okay, noted. Thanks. Second question is in regards to sort of the shift in your retention ratio. For a similar sort of top line, we've seen that your retention ratio has moved slightly. So if you could just give your comments on that, or sort of if there's a strategy over there to sort of retain more of the risk so that bottom line enhances. If you could just give some comments on that.
Well, see, the insurance industry makes money in only three ways. Okay, and I've been around 32 years, and I've been involved in each insurance company as consultant with my previous role with KPMG. The insurance companies have only 3 ways of making money. What I understand is, one is your pricing should be right and underwriting should be right. That's the easiest answer. The second is you have enough reserves and provisions which you don't need, and work towards those reserves to be released into the account. And the third is your question is you make money out of reinsurers, and you try to give the loss-making business more and more to the reinsurers and cover yourself, and you see the past history. But the profitable business, which is making continuously profit, you try to retain more with you, so that you have the profitability coming in there. So we are looking all our accounts in terms of the past histories, in terms of profitability and the losses, and try to have a treaty with our insurers where we retain more where the profitable business is. And the strategy is to retain more and more the profitable business, because as you see in our solvency, the Manhattan is quite high, and we still have scope in there to take some more risks profitably. And that's the strategy.
Noted. Thank you so much, gentlemen. Wish you all the best.
You're welcome.
Thank you. Is there any other questions? Otherwise, we can end the session. Okay. Thank you, everyone, for joining us today, and have a nice day. Thank you.
Thank you very much. Bye-bye.